looking at some of your previous courses as well, I think that's where I see it's just really good, solid content that come out in your courses, and that's effectively what it is that you do. You manage to distill that all of your knowledge into that one course, and then put it out in a simple way that just about anybody can take and run with it. And I know, I suppose, talking about how much history that you have had, you've been trading for 30 years and all that sort of thing. I'm curious to know where that came from. Like, I know you said a lot of trial and error and all that sort of thing. How did you actually get started with your trading?
Well, I've always been interested in the markets. I'm an engineer by education and also a finance degree. And so when you put those two things
Yeah,
together, it was I want to solve the puzzle of the markets, and
yeah,
that helped me get interested. But it hurt me learn because I was after the Holy Grail. As an engineer, I thought for sure I could design a method that would never lose.
yeah.
Right? And I learned, of course, after a while that I wasn't the first one to try to do that, and I wouldn't be
Mm,
the last. And to my relief and surprise, it wasn't necessary. You don't need the Holy Grail to do well. All you need is a set of good methods that give you an edge in the markets. And boy, as soon as that light went on, so to speak, that's when I started to really understand uh, an effective way to trade the markets. But it's been a lifelong interest. Not sure where it
mm.
came from, but I was always trading the markets. And back in the old days, you know, uh, we didn't have the computers. I'm going to sound like like an ancient person now, but I used to keep the charts by hand each day, and
Mm.
that's the way
Are
traders
you
did it.
kidding?
No, it's the way you did it. Yeah,
Yeah,
we didn't have the computer, um, so
that's that's a different way to look at things, that's for sure. But I'm imagining you'd get such an intimate understanding of the almost, because certain stocks almost have a personality to a certain extent. Was that how were you getting your edge back in the day? Was it similar to the way you're doing it these days, or?
yeah, actually, it was, and you're right. By having to hand update charts and do the calculations, you really did get an intimate feel for how the markets operate. And that's I'm glad you brought that up because you can have the best methods in the world. What a lot of beginners want to do is rush off and start trading those methods in a mechanistic fashion without thinking.
Mm,
Without thinking. I emphasize, look, you got to have the good methods, but you got to generate a feel for how markets work. And you can only do that by studying the charts, practicing trading, and getting familiar with the ebb and flow of how a market operates. And boy, that's worth volumes. And by hand updating those charts in the old days, I learned that right away. And so
that's
computer's great, but if you turn it into a mechanistic process, you're never going to learn how to trade the markets.
Yeah. I'm very interested in this topic, just because I know sort of through the way that I personally trade the market. I'm interested to hear. I know we were talking about, you sort of touched on it there, mechanical trading. Now, obviously, when I think mechanical trading, I think, almost like you've got a trading plan, a set of rules that you end up following. Is it that you're saying, no, no, don't do that? Or how is it that you're saying the mechanical way of trading? Or are you just saying don't have a system, almost like a black box system that you trade without knowing the inner goings on of the actual system?
Yeah, it's the latter. You definitely need a set of rules that have stood the test of time. But you
Mm,
do not want to trade like a black box computer coded program. And here's why. You do need, with any method, do need to apply discretion. For example, If a market is behaving rationally, where you look back the last 60 days and it's trading very deliberately, the average daily ranges are about the same, and it's trending up and down, and then, there's an ebb and flow to it, and all of a sudden you start getting these wild, wide-ranging days, two or three
Mm,
times the normal range of a daily bar. Well, what that tells you something. That tells you that there's something going on in this market that's unexpected. The volatility suddenly spiked, and even though your trading method might give you a setup and an entry signal, you should stand aside. Don't take it.
mm,
Don't take it. Because why? Because the market's not behaving as expected. And so the computer has a hard time seeing that. But you, as a thinking trader that knows the ebb and flow of the market, you see that right away. Here's another one. The markets are caught in a sideways chop, and
mm.
they're just lurching back and forth within a narrowly defined horizontal channel, and you're trying to trade trend based swing trades. Well, when you see that happening, run away from that stock or that ETF or that futures contract. That's not a good situation. And so technically your trading method might give you signals, but they're probably not good ones. So you stay out of that. You just stay away. There's something about newer traders where they think they got to trade all the time, every
Mm.
trade, and they don't. There's no rule that says you do.
Yeah,
Okay.
I, I know exactly what you mean with that, the newer traders and with that tendency to want to trade all the time. It's almost like they don't want to miss out on an opportunity. It's that classic thing of, oh, if I miss this trade, this might be the deal breaker. But we all know the markets are here to stay. They've been here for God knows how long, and they're going to be here till the end of time. So really, and you're not going to be able to grab every trading opportunity. It's unrealistic to try and think that you're going to get everything. There's just so many different markets. There's so many different opportunities. I like to think of it. I heard someone say that idea of, the opportunity or the trade of a lifetime comes around, about once every couple of
Oh,
days.
I love that. Yeah, that's absolutely true. So you
Mm,
could miss the next 20 opportunities. Don't worry. There's another one.
mm,
Absolutely, the trade of a lifetime's right around the corner. There's no doubt about it. If you look at the
mm,
U.S. market and many of the international markets in the last month or so, it's been very treacherous trading.
mm,
And
yeah,
as an experienced trader, you see that right off the bat as it starts to happen, and you pull back. You have fewer positions, smaller positions, maybe no position at all. Maybe you're all in cash, and you just
mm,
wait that out. Whereas the inexperienced trader is, they're beating their brains out trying to trade
it's
in that environment.